welcome to Markets Next Week. This is your one-stop for a complete picture of the trading day as well as the important cues that we're watching for the week ahead. I'm Nirta Ganguly, but let's start by taking a look at how the trading week wrapped up because it was a very event-heavy week, a very choppy week as far as trade is concerned. Let's bring in Monica Waldia then first to get a sense of all the market action. Monica, over to you.
Well, it was a choppy week for the markets with flat returns. The markets consolidated as elections and earnings played on the investors' minds. Both Sensex and Nifty ended with cuts of about 0.2% each. Nifty Bank also saw minor cuts of about 0.4%. Well, the broader markets also performed in tandem with the benchmarks. Both BSE mid-cap and small-cap saw cuts of about 0.6 and 0.2% each. Talking about the sectoral action, BSE Auto was the top sectoral gainer with gains of about 2.4%. FMCG also saw minor gains of about 2%. Power, healthcare and utilities were some of the other gainers. Moving on to the losers then, BSE Telecom saw cuts of about 3%. Followed by metals which saw cuts of about 2%. Basic material, finance, energy were some of the other losers. Well, let's take a look at the Nifty gainers then. Wipro was the top gainer with gains of about 8% after the company said that they will consider a share buyback on April 16. Tata Motors also saw good gains of about 5% after JLR said that they expect improvement in Q4 financial results. Bajaj Auto also registered gains of 5% on back of stable export outlook despite rising competition. Well, CIPLA also saw good gains of about 4% after receiving a couple of approvals from the US FDA this week. HUL, ITC, Maruti, M&M and Coal India on the other hand were some of the other gainers. Moving on to the losers then, Indiabulls Housing Finance saw cuts of almost 8% after reports of company exiting the realty business surfaced sometime during the week. Well, Asian Paints also saw cuts of about 5% after CLSA downgraded the stock to sell from outperform. Vedanta, Bharti Airtel, Bajaj Finance and Tata Steel were some of the other losers which saw cuts of about 3 to 4% each. Well, let's take a look at the mid-cap action then. Oberoi Realty was the top gainer and saw gains of about 8% after the Nifty Realty Index saw a good run up this week. Gillette also saw gains of about 8%. Followed by Motilal Oswal which saw gains of almost 7%. CRISIL, 3MI India, Cummins, ABB were some of the other gainers. Moving on to the losers then, PNB Housing Finance was the top mid-cap loser with cuts of almost 12%. Both Edelweiss and Godrej Properties also saw cuts of about 7%. Lastly, Future Retail and Sun TV saw cuts of about 6.4 and 5% each.
All right, Monica, thanks very much for taking us through all the market action. So that's a sense of how the trading week wrapped up. But looking forward then, of course, we're looking at a truncated week next week. Let's bring in Abhishek Ranjan to talk about the key cues, Abhishek, that will be in focus as we go into trade next week.
Yes, it's a truncated week, the week commencing 15th of April. But in terms of the key data points to watch out from the economic point of view and the key economic events that one needs to keep an eye out on will be the March WPI data and the trade data that comes out on the first day of the week, that is on a Monday. So these are the two key economic cues that one should be looking out for as far as the next week goes. In terms of a couple of global events that one needs to keep an eye out on, it will be India to hold round one of consultations in WTO on sugar swaps. So that is one key event, and the other around the crude, because a lot has been happening on that front, a lot of dynamics that we've been discussing on our channel here. So OPEC and its allies will meet in Vienna between April 17 to 18. So watch out for the kind of commentary that emanates from that all-important OPEC meeting and how the crude reacts to that particular to the set of commentaries that really comes out of it. And this being the Q4 earnings season, well, you have two large caps announcing the earnings next week, and Wipro from the IT space on a Tuesday, and HDFC Bank will be another company from the banking space on a Saturday that they'll be announcing their Q4 numbers. In terms of other corporate events that one needs to keep an eye out on, well, the all-important Interglobe Aviation, that's the Indigo from the all-important aviation sector, is to add 20 more domestic flights from Mumbai starting next week. Wipro board will be considering share back on Tuesday, again the same day when they'll be announcing their Q4 results. HDFC Bank to consider proposal for fundraising. An Idea Bank board meet to mull employee stock purchase scheme. So these are few of the board meets and few of the corporate events that one needs to keep an eye out on. And lastly, the most important one, in fact, the phase 2 of Lok Sabha elections to be held on 18th of April next week, wherein 97 constituencies spread across 13 states are to go to polls in the second phase of Lok Sabha elections.
All right, Abhishek, thanks very much for running us through that. Of course, earnings season will be kicking off in earnest, and that will really be a big decider as far as how the market shapes up going forward. Let's talk technicals then. Piyush Jain joining in, really give us a sense of the setup for next week. Piyush, how's it looking in terms of F&O cues?
Well, let's take a look at the top stocks and the levels of both Nifty and Bank Nifty. It was a good close on Friday, so now the levels become very important. Starting with the first, Nifty now 630. First of all, again 11,500, again 11,500. That has been defended. We actually have seen the put return area. In fact, 540 area has been defended. So now on the higher side, 660 becomes important. The nearby, you cross this, you are set for another 50-70 point rally, and then you're going to test the call return area of 11,700. So far 200 point range is what we have been playing in the last 4 consecutive sessions, and that range is again going to be tested next week. What is important here is, again, when the breakout can happen. The breakout can happen if the banks start firing up, and secondly, if auto FMCG, which has started to show signs again of good buying in the last 2 consecutive sessions, if they start participating along with IT sentiments, then perhaps actually we will be in a position to again cross this. But having said that, on the lower side, 540 is still a good support, and that's something which is going to remain valid for next week also. Let's call for Bank Nifty, and let's see again how the levels are going to look for the Bank Nifty. This is the one which helped Nifty again recover above 600 levels again, and we need another support coming for PSU banks and private banks. So first of all, 30,030, this is the sort of minor support, minor important level, but what is the most important level? You cross this, you rally for 200 points, and this is a breakout point here. You cross this again, and then you are again set for the monthly momentum here. A 400 point rally could be on the cards, and for this you need private bank participation, and that is something which could be coming just a week before again of the private bank results again. So watch out for that next week as we start anticipating private bank results. On the lower side, 29,500, 800, those levels have been negotiated for the entire last week, and we have seen again the traders have defended that through good sort of put writing here. So that's the Bank Nifty looking positive but not out of the woods at present. The onus basically is going to lie now on FMCG, a bit on auto, a bit on IT, I think, and that's what I think we are going to wait and watch out for next week here. But stocks, I think that's we should be talking about. Which are the stocks which actually saw some good long build up? On the large cap side, there was a good long build up in the F&O again for ITC futures, Bajaj Auto futures. In fact, being a large cap in the cash market, good delivery volumes, HDFC Life actually saw some good strong accumulation. So these are a couple of large caps which actually are looking good for next week here. On the mid cap side, Ramco Cement from the cement pack continues to see strong traction, good sort of pricing gains. Then you had Bansali Engineering and also AstraZeneca Pharma from the mid cap side. Again, all these stocks were actually seeing some good accumulation in the futures, ITC, Bajaj, and the rest all the stocks again were seeing some strong traction in the cash market, looking good for the next week.
All right, thanks very much, Piyush, for taking us through that. In fact, on that note, let's welcome in our guest joining us on the show today. Sameer Dalal of Natwar Lala and Sons joining in on the fundamentals, and Manav Chopra of India Bulls Ventures joining in on the technicals. Welcome to the show. And Manav, let me just start by talking about the key levels that we should be keeping in focus, because if we look at the week gone by, the market's really gone nowhere. Of course, we're coming on the back of a stellar run as far as March is concerned. At the moment, though, we're consolidating off those record highs. Even the record high that we did make was just about a point or so higher than the move that we'd seen earlier. But we can't deny the positive sentiment that has been ruling the market so far. Does the picture change as we talk about the month of April? Because, at least if we look at the last 5 sessions, it's been a flat move. It's been very choppy within a very tight range. And in fact, we've ended the week lower.
See, markets have already seen a very good rally, like you mentioned, and post that a short-term consolidation is usually the formation that we've seen in the past. It's basically the markets are currently consolidating its gains, and the recent decline is nothing but a time correction in the overall uptrend, and such formations are supposed to be very healthy for the markets going forward. On the immediate basis, the support levels for the Nifty on the lower side will be at 11,550, and for the Bank Nifty is at 29,600 to 29,700. So as long as these support levels are held for next couple of trading sessions, I sense in the near term the markets would eventually start moving on the upside. The overall momentum is turning positive. We have also seen a good bounce back today from the intraday support levels, and which is hinting for some more upside in the near term perspective. For Nifty, the immediate resistance is at 11,700, and once if we break that, I think we would be opening gates towards the 12,000 level. So that is one key level to watch for coming week. And for the Bank Nifty, 30,100 is the important resistance, and we expect after a brief consolidation to see a breakout on the upside, and we've seen a good bounce happening from the PSU banks. Eventually that above 30,100, I think we could be eyeing levels of 30,800 to 900 levels.
Alright, so those are key levels to watch out for the Nifty and the Bank Nifty, looking poised for more upside still as far as the banking names are concerned. Sameer, there's no dearth of cues at the moment as far as the market is concerned. It's a cocktail of earnings season, of course, kicking off in earnest as we wind down the financial year and kick off the new one. And along with that, there is, of course, elections. One phase is behind us. We have 6 more to go, and volatility does seem to be here to stay. What then would be informing your strategy in terms of market, being a market participant at the moment? Are you buying on dips? Are you expecting any sort of a sectoral churn? What's the strategy?
I get a feeling the markets are not going to play, in any significant rally on either side, the upside or the downside. They're going to be more focused towards stock specific. But am I buying on dips? No, at the moment I'm not. I still believe that the events that are coming up, the results in the election results in May are going to be something to watch out for. And I think you will get an opportunity either way, whether the BJP wins or the Congress or there's a Gathbandhan. I think the markets will give you a correction because they've run up quite a bit pre-election. So I would be waiting and watching. I'd be more stock specific. If something interesting comes up, that is something I would be picking on. I'm not playing the broader Nifty market at the moment.
Alright, so keep it very stock specific as far as the broader, in terms of the indices, that's perhaps not the best move at the moment. Sameer, what is the sense of valuations at the moment? And I just want to split that up between large caps and then on the other hand, the mid and small caps, because we can't deny the recovery that we've seen for the broader market names. We're off, that bear market territory that we found ourselves in not too long ago. We're still off about a 10-12% from the peaks as far as the mid and small caps are concerned. But valuation wise, how is the space looking to you?
So you're absolutely right. There's a big dichotomy in the market where you have the large caps trading at premium valuations, probably higher than what they have historically. And you have the mid cap basket and the small cap basket which are trading at extremely cheap valuations, after the correction that has happened in the market. So I believe that has to reverse. So what you could very well see is the large cap kind of, stabilizing, even post good results, the stocks not giving major move ups. But if your mid cap and small cap companies are able to deliver a decent set of numbers, and if we get something like a stable government in the center, I think there is a big re-rating that can happen in the entire mid cap and small cap kind of a space. Like I said, valuations are attractive. Stocks are trading 50-60% off their highs. So you have to be again very stock specific, sector specific. So the auto sector may not be performing extremely well right now for the simple reason that the sales are down. But there are other sectors, your NBFCs, which have taken a massive beating, or consumer discretionaries which have taken a beating. Those kind of stocks could see a rally, because I still believe that the India growth story is intact. Yes, we might face a bit of a turbulent period during elections, but the longer term investment thesis for India still remains. And I would definitely be choosing to buy individual companies which we think have good growth opportunity over the next 3 to 5 years.
All right, well, that's the sense as far as some of the broader market participants are concerned. Valuations definitely looking improved after the recent correction that we've seen in that space. Let's take a quick break. On that note, we'll come back and talk about several of the stocks and sectors that you need to keep on your radar as you set yourselves up for trade next week. Both Sameer and Manav are right here with us. Stay tuned, we'll be right back. News to do well. Of course, in Friday's trade, we did see a bout of profit booking come in for that one. But overall, we've been adding very, very heavily, as far as that counter is concerned. We find ourselves above the 210 per share mark. And in fact, it's been a one-way move ever since, the kind of cut that we saw following their third quarter results. Of course, results will dictate direction going forward. But what is the sense that you have on many of these auto names that have been seeing, quite a bit of correction? A Maruti has recovered smartly. The two-wheeler names are on the move. Hero Moto, Bajaj Auto, even a TVS Motors. What really are you liking as far as the auto space goes?
See, most of the auto packs are bouncing from its important monthly support levels, and we've seen a lot of stocks have been preceded by a good amount of decline. Specifically, we talk about Maruti, Escorts, and even Tata Motors. We have seen a common pattern which is indicating that there is a short-term bottom in place. There is a very heavy volume rise that we've seen in stocks like Tata Motors and Maruti in the recent up move, and most importantly, the move has also accompanied by high delivery volume. So we can sense that looking at the other oscillators which are also indicating a positive crossovers, at least in the near term, for a couple of weeks, we can expect this trend to continue. For the immediate basis, I think Maruti and Tata Motors are still very well placed. Any short-term dips could definitely be looked into buying at the current levels. The important support for Tata Motors on the lower side is at 210, and after a good long time, Tata Motors has also managed to close above its long-term averages. I sense in the near term this sector could see a good amount of outperformance. And if I have to pick one, Tata Motors would definitely be one of my picks, and the other stock for a shorter momentum play definitely is going to be Escorts. The stock has also seen a good bounce from its important support, and eventually I expect another 10-15% upside from the current levels.
All right, 10 to 15% upside can't be ruled out on an Escorts. What about a Tata Motors, Manav? What kind of a target are you looking at here?
See, Tata Motors has an important support at 210 and recommend a buy on dips approach. For the immediate basis, the target for the stock could be around 230, but eventually if one looks at for the medium term to long term perspective, 250, 55 levels cannot be ruled out.
All right, so that's a fair amount of upside that could still be seen for a Tata Motors. Remember, this is a counter that has eroded a lot of investor wealth in the past, and at the moment we're seeing quite a strong recovery come in. But the question, of course, Samir, is will the fourth quarter numbers that we'll see from Tata Motors be able to support the kind of run that it's had recently as far as the stock action goes? Because they reported their biggest ever quarterly loss just 3 months ago, and at the moment, of course, we're seeing a good move on Tata Motors, but the business environment, not just for a Tata Motors, for the entire auto sector, does remain equally challenging.
So I don't think the worst is over for auto, right? You got to really see the sales coming back aggressively. What you're seeing right now is a lot of production cuts happening from a lot of the auto companies, as indicated by Maruti, by Hero, Honda, Bajaj and the likes. Given that the production cuts are there, you cannot expect them to deliver strong profitability, right? You're going to have the operational leverage not happen, because you need volumes for the operational leverage. Now coming to specifically Tata Motors, which was your initial question, is the stock run up warranted? Probably it was a bit warranted given the kind of fall it had taken, right? A bit of the fall, of course, you talk about a huge 25,000 crore loss in the quarter. That was a whole bunch of kitchen sinking. So now what you're going to see is whatever pain points were there in the results. If they had to do any sort of provisioning, they would have thrown it in last quarter. They wouldn't have left something. I mean, if you're delivering 25,000, if it became 25,400 or 500, it wouldn't have mattered. So what you will progressively see is earnings will stabilize and start getting better. You won't get any of these one-off events. Having said that, the sales have still not picked up for Jaguar Land Rover in a way that warrants that the earnings will be significantly better, which warrants a re-rating in the stock. So am I expecting the stock to continue its momentum? No, I'm not. Not in the near term. I am a long-term bullish investor in Tata Motors, but I still think there's a bit more of pain. The Chinese market has not recovered. China is one of the big important markets for the Jaguar Land Rover business, and that has not picked up. Yes, the domestic business for Tata Motors is doing well, but that is a very small piece of the overall profitable pie. So until Jaguar Land Rover starts getting its uptick, I don't think it warrants an investment. And coming to the entire auto pack, like I said, I think it's more of a dead cat bounce right now. I still think the stock should probably go back and test its lows once again. You could get a rally before that happens, but I wouldn't be in a rush to buy any of the auto pack at the moment.
All right, don't be in a rush to buy auto at the moment. The business environment does remain challenging, so the worst definitely not over, at least as far as the fundamentals are concerned. Manav, one space where we've seen a move this week that hasn't quite performed in the past is the FMCG pack, and I have to ask you about an ITC. Most of the move that we saw came in on Friday. It was a very smart move coming in. In fact, the top contributor to the kind of recovery that we saw in the last hour or so as far as Friday's trade is concerned. What is the expectation on ITC above these 300 levels going forward from here? And anything else that you're liking from, the same consumption pack. So even if you talk about a Gillette India from the mid-cap space, one of the outperformers of the week as well, what's looking good to you here?
See, if looking at the were actually consolidating in a broader channel formation, and since past few trading sessions we did observe a series of minor higher bottoms being made, which was indicating the prices are on verge of an upside breakout. Today the breakout has happened also not only on the daily but also on the weekly perspective with above average volume. So at least in the near term perspective we can expect some good amount of a momentum coming up for ITC on the immediate basis. The immediate support for ITC on the lower side now will be 300 to 298 on the lower side, and this structure formation indicates for an upside target of at least 325 to 330 on the upside, so which is a good healthy upside, and which would also add some momentum for the main office FMCG space. If you're looking at other stocks from this sector, HUL has already seen a series of decline from its peak of 1850, and it's bouncing from its oversold levels, and today it has also managed to close above its 100-day moving average. So in all, I think this FMCG space would see a good momentum at least for the near term perspective, but if I have to pick one, I think ITC is definitely very well poised, and it could see some good momentum coming forward.
All right, ITC remains the preferred pick as far as the technicals go. What about fundamentally, Samir? How are you playing the consumption theme at the moment? I know it's election season and we can expect things to remain volatile. Consumption perhaps not the best place to hide in a volatile market, considering the kind of lackluster trade we've already seen for this space so far. But which would be the names then on your list? Where really are you seeing value now going forward?
So if you want to play the FMCG space, I think ITC is the one space that you can play given the fact that valuations are attractive, right? So yes, it's a cigarette play, and that's where bulk of their cash flow comes from at the moment. But in the other products, that the FMCG products, they are gaining traction. What you're seeing is increased product basket, and that increased product basket will lead to operational benefits, which will lead to higher profitability, and that's, I think, when the big re-rating in ITC will happen. Election season actually is great for the entire FMCG space because it eventually leaves more money in the hand of the retail consumer, and all these freebies getting announced. So post the elections, whichever party comes and starts doling out its freebies, that kind of will add a bit of an impetus to the entire FMCG space. But I still think instead of playing the FMCG space, you can play the consumer discretionary space. Like I said, auto at the moment, of course, is one of the spaces that is going through a bit of a tough time, but on a longer term basis, I still think auto has a great investment opportunity. I'm just waiting for corrections to buy. But apart from that, there are other discretionary spend. You have companies like Whirlpool, you have companies like Voltas, you have other consumer discretionary like Aditya Birla Fashion and Retail, which is in the entire retail space. You have a Coffee Day Enterprises, you have Thomas Cook and Cox and Kings, which are your travel and tourism. I think that entire space still has great opportunity and upside. So it is something I would be looking to invest in. There are some preferences that we have, which I mentioned, which one of them is Cox and Kings, the other one is Coffee Day Enterprises, where valuations are reasonable. We think these stocks over the next 2 to 3 years will see good traction, good SSSG in the case of Coffee Day, value unlocking from the sale of Mindtree, and these are the kind of stocks you can play for a longer term period. But the FMCG space, the Levers, the Daburs, Marico's, all trading at premium valuations, I would not be looking to invest in them at this point of time.
All right, point taken. Be selective and perhaps avoid the kind of names where already we have expensive valuation. Cox and Kings, Coffee Day, some of the names on Samir's list. In fact, Manav, let me get a few top bets from you then as we look at trade on Monday morning. Which are the names on your list?
Yes, my first buy pick is on CIPLA. The prices have already seen a very good breakout today on the daily charts, and since quite some time the stock has also witnessed a good bounce from its oversold levels. Most importantly, the volumes are also confirming a good momentum built up at the current zone. It has an important support at 545 on the lower side, which is also a stop loss. On the immediate basis, we expect the stock to see a good rally on the upside, and we expect an upside target of 580, which is close to our long-term averages. My second pick would be from the auto space, which is an ESCORTS. In fact, the stock has been in a very good uptrend since quite some time now, and recently has observed a corrective decline from its recent peak. Overall, the structure is still bullish, so the recent decline is more or less corrective in nature, and from here on we expect higher levels to be achieved. The immediate support for the stock is at 770 on the lower side, and on the upside we recommend a buy into this for a targets of 820.
All right, so that's a CIPLA as well as an ESCORTS, two names to keep on your radar going forward. Top bets coming in there from Manav on a technical basis. Sameer, final comment to you then. You mentioned quite a few names that you like, especially in terms of the consumption theme. Slightly near term in terms of, picking up value even at the current time, in spite of the volatility we're seeing, in spite of the fact that we are looking at a truncated week ahead of us as well. Which would be the one or two names that you are watching closely?
So if you ask me for a short-term bet, then I think the banking space is probably the best place, NBFC and banking. You have ICICI and Axis Bank. I think you're going to start seeing good results from them over the next 1 to 2 quarters, and I think re-rating is very close by. Yes Bank with similar kind of situation, IDFC First Bank. In the NBFC space, I think you're going to see stocks like L&T Finance, M&M, all move back up. You've already seen your Bajaj Finance move up. Now if you go down, I think you'll get the as good, if not, I wouldn't say better, but as good companies will also start seeing. So if you're playing a short-term bet, I think banking and NBFC still is the best space to be in.
All right, banking and NBFC is a space to be in as we move forward from here. Sameer, Manav, thanks very much for joining in, of course, sharing your perspective on the markets. There's a lot of action lined up as we move forward into the month of April and the new financial year as far as the market is concerned. But for the moment, completely out of time on this edition of Markets Next Week. News and updates continue on the other side. Thanks so much for watching.